Hey, good morning. Welcome to the morning brief. Today is Monday, March 17th. So, what's going on? So, first of all, got to let you know that it is rollover day, and so we've shifted from the March contracts to the June contracts. So, just FYI, June contracts. News this morning: we had core retail sales came in as expected. Retail sales came in less than expected, zero point 0.2 versus zero point 0.6, and the Empire State Manufacturing Index came in at minus 20. So these are bad news for the economy. So under normal circumstances, these would cause the market to go down. But of course, we'll show you in a second, the market actually went up. Why the conundrum? Why the opposite reaction? Because in this market, good news is bad news and bad news is good news because we're looking at the Fed. If the numbers are bad, the Fed's going to lower interest rates, and everybody thinks that's good. It's completely counterintuitive and ridiculous. But anyway, 10 a.m. business inventories month over month and the housing market index all at 10 a.m. And that is all we have for today on Monday. Looking at charts, looking at the daily chart here, you can see we're gapping up. Certainly within expectations, yes, we would expect after multiple down days that we would somehow start to have a dead cat bounce or at least a rally of some sort. This big rally bar from Friday, look, is crappy volume. I don't believe this there's just no confirmation that this is the bottom. We're just bouncing a little bit. We'll see. I don't think it's going to hold, but if it does, where could it go? I think it could go up to 57.91 or could retest the lows that we've had over the last couple of days around 55.42. So yeah, that's sort of the pattern doesn't conform. Up day on Friday, barely had up inventory, still up inventory on up volume. So this is another thing that should be really screaming at us. Big up day, but very little inventory increase. So yeah, kind of weird there. It's still positive, so it's still correlated, but should be giving you a red flag. Looking at the overnight action is about 5,700 all the way down to 56.51. That's 49 points. So that's above average volatility. Here you can see the big move to the upside on those dismal retail sales numbers and manufacturing information there. So doing the opposite of what you would expect. Good news is bad. Bad news is good. That's just the whole watch the Fed market mentality. So there you go. Where could it go? There is confluence up here around 57.05 as well as 57.25. Going up higher, 57. I'm going to say 57.50. Support on the other hand. Let's see. What do we got down here? 56.31, 56.15. A little bit just under 5610, 5608, 5600, of course, would be the big number. And then there's a whole ton of confluence right down here around 5590. So those are the numbers. Stock Trader's Almanac is 52.4, 52.4. So a slight positive bias for the first day of this trading week. Hope you have a great day. See you tomorrow. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.